In the world of business, data is everywhere. Every sale, every bill paid, every loan taken, and every salary deposited creates a trail. But without a central hub to organize this chaos, a business is just a ship lost at sea. That hub, the single source of truth for every financial pulse of a company, is the general ledger. If the journal entries are the diary of a business, the general ledger is the encyclopedia. It is the master record where every transaction is categorized, summarized, and stored. Today, we're going into the engine room of accounting to see how the general ledger turns raw data into financial clarity. The general ledger, often called the GL, is a complete record of all the financial transactions of a company over its entire life. It is the backbone of the accounting cycle. Think of it as a giant filing cabinet. Inside this cabinet, you have separate folders for every single thing the business tracks: cash, accounts receivable, inventory, wages, sales, and rent. In the GL, these folders are called accounts. Each account in the GL provides a historical trail of activity and a current balance. When you want to know exactly how much cash you have right now or how much you owe your suppliers, you don't look at a pile of receipts, you look at the general ledger. Before a single number can be entered into the GL, we need a map. This is the chart of accounts. It's an index of every account name and number that a business uses to categorize its transactions. Most businesses follow a logical numbering system. For example, 1000s are for assets, like cash, buildings, equipment. 2000s are for liabilities, like loans and bills to pay. 3000s are for equity, like owner's investment. 4000s are for revenue, like sales income. 5000s are for expenses, like rent, utilities, marketing. This organization ensures that when a transaction occurs, the accountant knows exactly which folder in the GL it belongs to. The process of moving information from the daily journal to the general ledger is called posting. Imagine you sell a product for $500 in cash. First, you record a journal entry: debit cash, credit sales. But that entry just sits in a chronological list. To make that information useful, you post it. The $500 debit moves to the cash account in the GL, and the $500 credit moves to the revenue account in the GL. By posting to the GL, the business updates the balance of those specific categories. It shifts the focus from what happened today to what is the total balance of this account. Within the general ledger, each account is typically viewed as a T account. This format is the classic way to visualize the left, debit, and right, credit of accounting. Let's look at the cash account in the GL. Every time cash comes in, a line is added to the left side. Every time cash goes out, a line is added to the right. At the bottom, we calculate the ending balance. This simple visual ensures that even with thousands of transactions, we can see the net result in seconds. At the end of a month or year, the general ledger must prove it is accurate. We do this by creating a trial balance. We take the ending balance of every single account in the general ledger and list them in two columns. Because of the double entry system we've discussed, the total of all debits must equal the total of all credits. If the totals don't match, the trial balance screams error. It tells the accountant that somewhere in the posting process, a number was entered incorrectly or a transaction was missed. The GL acts as a self-correcting system for the company's integrity. Why go through all this trouble? Because the general ledger is the raw material for the most important documents in business, the financial statements. To create an income statement, you simply pull all the revenue and expense account balances from the GL. To create a balance sheet, you pull the assets, liabilities, and equity balances. Without the general ledger, it would be impossible to report to investors, file taxes with the government, or tell if the business is actually making a profit. It is the bridge between daily activity and high-level strategy. In the past, the general ledger was a literal book that could weigh 20 pounds. Today, it lives in the cloud. Modern ERP and accounting software automate the posting process. When a barcode is scanned at a register, the general ledger is updated instantly. This real-time accounting allows business owners to see their financial health every minute of the day. Artificial intelligence now scans the GL for patterns, spotting potential fraud or suggesting ways to save money before a human even looks at the numbers. The general ledger may seem like a dry collection of numbers, but it is the heartbeat of every organization. It provides the transparency that builds trust with banks and the insights that allow entrepreneurs to dream bigger. From the smallest local bakery to the largest tech giant, the general ledger remains the master record, the final word on the story of a business.